So the first time I came across this term Hindu Undivided Family, it was in my class 11 NCRT book on business studies. तब तो मैंने कुछ ध्यान नहीं दिया, my fault. But if you're from a Hindu family, don't ignore this video. You'll broadly learn what an HUF is, how is it structured, its pros and cons, and how it helps you save a bunch of taxes legally, especially at a time when the government seems motivated to close every tax saving avenue. That said, let's start with a foundational question. What is a Hindu undivided family? While the concept of a joint family might be slowly fading, many Indian families even now tend to own properties and manage their wealth collectively as a unit and not as individuals. In fact, it was to protect this joint ownership that the concept of a Hindu undivided family or HUF was legally recognized. So essentially, an HUF is a legal entity, and similar to a company or partnership, it can own assets, run a business, invest in the stock market, have its own bank account, and if that's not all, an HUF can also take a loan in its own name. An HUF can be opened by a married couple with at least one child, and understandably, they have to be from the Hindu community. It's not exclusive though, even people from the Jains, Sikh, and Buddhist community can open an HUF, and there's also some confusion as to whether one needs to have a child to form an HUF. I'm really not sure, so please do consult your chartered accountant for more specifics on this. With regards to the structure, and I'm just simplifying this, but let's say Mr. Sharma here decides to form an HUF. So his wife and children automatically become part of it, and later when there are grandchildren and great-grandchildren, all of them also become a part of the same HUF. Mr. Sharma is what we call as the Karta, who is essentially the manager and the primary decision maker of the HUF. The Karta is usually the eldest male member of the family, but nowadays even the eldest female member can become one. Next, we have the co-partners, that is members who are born into the family, and each of these co-partners have an automatic right to the HUF's properties and assets. Notice the phrase I used, born into the family, which means while Mr. Sharma's children become co-partners, his wife cannot become one because technically she is not born into the family. Which brings us to the third part of an HUF setup, the members. And unlike a co-partner, a member cannot demand partition or claim a specific share in the assets. That's how this chain works. So when Mr. Sharma's children get married, their spouses also become members of the HUF, and the series of creating co-partners and members will go on till about the fourth generation, post which no more co-partners can be added. At its core, the essence of an HUF is collective ownership to see that the assets belong to the family as a whole and no individual member can claim exclusive rights over them. I won't get into the details of splitting of assets, बंटवारे की बात नहीं करेंगे, अभी मैं जिंदा हूं. But the pleasant thing is, forming an HUF from an income tax perspective is not at all a difficult exercise. In fact, all you need is to get a PAN card for the HUF. To obtain one, make an affidavit. The format can be found on the internet. Enter the details, send it to NSDL, and in a few short weeks, they'll send you the HUF PAN. With this, you can open a bank account. If you're running a business within the HUF, then you can get a TAN, apply for a GST, and so on. Your chartered accountant can give you a better idea of all this, but my understanding is it's not at all difficult to register, and all you need is an HUF PAN, a bank account, and an HUF deed stating its formation. Alright, so let's look at the money part of an HUF, and there are typically two parts to this. The first is the funding part, that is, how can money move into or be generated within an HUF. And then there's the utilization bit, as in how can the HUF apply that money. Let's start with funding, and contrary to what one might think, funding an HUF does not mean you can start moving money from your bank account to the HUF. It's not that simple, and if you do that, the income tax authority will simply club the HUF income with your income and you'll not receive any tax saving benefits out of this. Instead, you'll have to fund the HUF account legally, and there are few ways of going about this. So firstly, there's a will, as in if someone in your family has passed away and they've written in a will that they are giving this money, say 5 crore rupees, or let's say some property to the HUF, then that's a legit way of funding. You can also fund the HUF via a gift that's received from an unrelated party, so someone outside of your family. Just remember, if the gift is over 50,000 rupees, then it does attract some taxes. Another way, a third way of funding the HUF is through a loan from a family member, and that includes you as well. But I don't think this is a very efficient process because every loan carries an interest, and this interest becomes taxable at the hands of the lender. And fourthly, there is the running of a business, which is how many Hindu undivided families in the country create their capital. These can be big businesses generating a turnover of a few crores every month, or it can be something simple like a freelancer who does some of his project work in his name and some of his business happens via the HUF. I'll come to the numerical implications of this in a minute, but the core idea remains. And HUF is a separate legal entity. It can legitimately earn income. It's what lakhs and lakhs of families around the country are doing, and there are ways of saving a bunch of taxes by opting for one. Okay, if the funding part is clear, let's move on to what the HUF can do with all that money. Actually, let me start with what an HUF can't do, and very simply, it can't take a salary. Why? Well, a salary is often tied to an individual's skills, expertise, or employment, and since an HUF cannot be employed and it cannot offer any personal services, it therefore cannot earn a salary. But other than salary, an HUF can deploy funds and generate wealth in almost every other way. For instance, the HUF can run a family business and generate profits from there. It can buy and own properties, which gives it rental income. And an HUF can also own assets like land, a car, shares, mutual funds, etc., which allows it to earn dividends, interest, and capital gains. In fact, let me cover a couple of scenarios here. Let's start with real estate, and a popular use case is the transfer of any ancestral property you might have into an HUF. So look at it this way. Say you and your spouse are both salaried employees and you fall under the 30% tax slab. Now this ancestral property does generate some rental income, which means you'll have to pay 30% on that income if it were to be taxed in your name. However, if the HUF owns the property and the annual rental income is below 4 lakh rupees, then it doesn't need to pay any tax on that income. So that's a saving of 30%, a saving of 1,20,000 rupees in taxes, which is sweet, isn't it? Yet another popular use case is the opening of a Demat account in the HUF's name. How does this help? Well, firstly, it gives you an additional account for you to apply to IPOs, thereby increasing your chances of allotment. And secondly, any profits made on stocks or mutual funds on this account will be taxed under the HUF span, which means you can save even more in taxes by claiming an exemption of up to 1.25 lakhs on any long-term capital gain. Actually, having an HUF Demat and trading account is like a no-brainer now. And if you're interested in one, then let me show you how Groww, the sponsors of today's video, have made it super easy and convenient for us to have one. Pleasantly, their process is 100% online. It starts with the contact details, the mobile number, email ID. We then upload the HUF PAN card. Next up is the HUF's bank statement. Fill in the account number, bank name, IFSC code, etc. Then an image of the seal with the Karta's signature. The Karta's documents, which is easily fetched via DigiLocker. Then a selfie to complete the KYC. Details like the name, date of birth, gender, etc. of the Karta and others. And finally, confirm everything with an e-sign. And that's it. Your KYC is complete, everything has taken less than 5 minutes, and if all the steps have been done properly, your account will be activated in 2 to 4 working days. So essentially, what was done offline and used to take anywhere from 10 days to a month, Groww has shrunk down the entire process to just a couple of days. There are no physical forms to be submitted, no branch visits, no couriers, and even if your CA is handling your accounts, I'm sure he or she will find this process extremely efficient and super fast. As I said, it's a no-brainer, and if you want to apply through multiple accounts for an IPO, save taxes on capital gain, or if you want your family's investment wealth to be in one place, then do explore Groww's HUF account. As always, the link to the platform is available in the video's description. Okay, so I'm sure you've figured it by now, tax saving is one big reason why people go for an HUF account. To put a number to it, and according to the Finance Ministry, 8.75 lakh HUFs claimed some 3,800 plus crores of tax reductions for the year 2023. Some of these reductions include the basic exemption of up to 4 lakhs. I think it's 4 now per the new regime. Under the old regime, up to 1.5 lakhs can be claimed under Section 80C for investments in the Public Provident Fund, ELSS, and even life insurance. Yes, you heard that right. The HUF, if it wants to, can purchase life insurance policies for its members and claim a deduction under Section 80C of the Income Tax Act on the premiums paid. Likewise, there's health insurance, so Section 80D, which includes health insurance premium paid for its members. And of course, there's the point I mentioned earlier, that is a 1.25 lakh exemption on LTCG also applies. I'm just giving you a broad overview here. Please do consult your chartered accountant for specifics. There might be many more deductions. There's old regime, new regime. The law might have been updated. I'll leave the detailed research part completely to you. But to understand the tax saving part, let's try out a simple example. We'll continue with Sharma ji, and just to build in a scenario, let's say Mr. Sharma earns a salary of 18 lakh rupees for the year and he receives a rental income of 5 lakhs from an ancestral property. Now, sometime during the year, he has also invested 1.5 lakh rupees in his PPF account, and he's also redeemed some of his equity mutual fund investments, resulting in a long-term capital gain of 2 lakh rupees. So these are the base scenarios. Let's call this scenario number 1. And after plugging these inputs into a calculator, it shows that Mr. Sharma's total tax liability under the old regime comes to some 4,23,150 rupees, while this number is a little under 2.5 lakhs under the new regime. Alright, now let's change the scenario and say Mr. Sharma opens an HUF account in addition to his individual account. In this case, the easiest thing to do is to move the 5 lakh rupees of rental income into the HUF. I'm sure that's what his CA would also recommend, and the single adjustment drastically reduces his tax liability by over a lakh under the old regime, while under the new regime, Sharma ji would have saved over 30% in taxes. Okay, let's move to scenario 3, and a splitting can be done of the capital gains as well, maybe not in this year, but definitely with future investments. And had Mr. Sharma booked a lakh in his individual account and the other lakh in the HUF account, then that would have saved him even more in taxes, as all of his capital gain would have been within the 1.25 lakh exemption that's allowed under each of these accounts. I'm sure by now Mr. Sharma too would have realized how creatively he can use the HUF account to reduce his taxes, and that too legally. And because Mr. Sharma's occupation allows him to split some contracts under his name and some under the HUF, he ended up further lowering his taxes. I mean, look at this. What was originally a tax liability of 4.23 and 2.37 lakhs under the old and new regime is now down to just 2,23,000 and a mere 36,000 after Mr. Sharma incorporated an HUF to split his incomes. On a percentage basis, it's a tax saving of 48% as per the old regime and a whopping 85% per the new regime. So that's definitely something for many of you watching this video to think about. Okay, now understandably, all this tax saving is not without its downsides. For example, legal complications arise whenever a co-partner asks for a partition, which by the way is allowed under Hindu law. Now, if the asset is liquid, then the situation is solvable. But what if the asset is illiquid? Let's say it's a house. Now, you really can't cut out 1/4 of a house and give it to someone. Kitchen ka 1/4, bathroom ka 1/4, balcony ka 1/4, it's not that easy. The other option is, of course, to sell the house, a forced sale, and divide the proceeds, which again has its complications and leads to a lot of ill will amongst the HUF members. Similarly, the closing of an HUF is one messy process with many logistical challenges, and even an NOC needs to be taken from the income tax officer before one can dissolve the HUF. So these are things one should be wary of when creating an HUF. But yes, if you live in a closely knit family where everyone gets along well with each other, then yeah, there is a fair amount of tax you can save in the process. Of course, all this will require a bit of effort on your part in terms of the initial paperwork, and you'll have to file taxes separately, one for yourself, one for the HUF. So please be prepared for that and don't just make an HUF for the fun of it. In my view, a couple of scenarios that work really well is, firstly, if there is parental property and you're earning rent from it, that's something that can be carved out separately through an HUF. And secondly, if there are multiple sources of income, then also setting up an HUF works very well and you can save a bunch of money in taxes. I'll encourage you to read up more about it on the internet. Do talk to your chartered accountant to see if an HUF is ideal for you. And once you've set up, don't forget to create a separate Demat and trading account to keep HUF investments separate from your individual investments. The team at Groww has put in a lot of effort to make this entire process fast and easy. So do take advantage of that using the link in the video's description. Alright, so that's it. HUF was a new subject for me. I learned quite a bit from this research and I sincerely hope you did as well. Once again, thank you for your time. Do like this video and I'll see you next week. Until then.